Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. Thanks for joining me. I'm going to be doing today a market and sector overview for the week that just ended, April 14th, 2023. In that, I'll cover the status of the S&P and the Qs, and we'll take a look at that for both the last trading week as well as looking at it over the course of what we refer to as a rolling month. So we'll take a look at that, and then from that we'll kind of take a deeper dive, and we'll actually start to move into looking at the various key sectors that make up the broad market, and we'll highlight some areas of relative strength and weakness. And again, we'll look at it for those two time frames of the last trading week as well as the rolling month, and then we'll also talk about some approaches that at PTL we tend to use once we identify these areas of relative strength. From there, we'll look at highlight some key levels for the S&P and the Qs. We'll actually look at some live charts. We'll kind of point at some levels where we expect price to turn in terms of having some actionable levels that we can look at. And then lastly, we'll look at a couple of other symbols as well. So anyway, that's the battle plan for today. Before I do that, though, of course, let me just put up the ubiquitous disclaimer. Everything that we're going to show you here is purely for educational purposes only. We are not financial advisors. We are not planners. We're not fiduciaries. So everything again is for educational purposes only. All right. So let's get to it. If we turn to first of all looking at the broad market here, this is an intra-week percent change chart that I put together here. And so again, this is for the last trading week that started on the 10th of April and running through the previous Friday here on the 14th. Okay, and this is showing then the percent change from the prior week's close. You may notice here there's an extra day in here. Normally the week would have ended on the 7th, except this includes the Good Friday holiday. So that's why the last trading day for the prior week was actually the 6th, and not the 7th. Okay, so at any rate, for the last week, we could see that the Russell, in fact, was up about 1.5%. The Nasdaq was practically break even, and the S&P was up just a little south of 1% for the week. So you can see in the broader sense, this was obviously a relatively quiet week for the markets. Okay, so that's what we were looking at in terms of the broad market. Okay, and now if we kind of take a little deeper dive and then look into the actual sectors for the prior week, we can see that the financials were actually the bigger winner of all the 13 major sectors that we look at here, and we can see that the S&P, the financials were up a little south of 3%, as well as energy. And in fact, these were actually kind of weak sectors over the last few weeks, but in fact, they obviously rebounded last week. In particular, looking at the financials, of course, one of the things that were really kind of hammering the financials were what was the regional banking crisis. Okay, and so right here, this is a chart here of the regional banking, essentially showing the regional bank ETF as well as the XLF, which is the financial ETF, of course. The regional banking crisis started on the very early in March, on March 3rd or so, right? Yeah, March 3rd here. And so what I did was I just basically put a line in here that highlights, and you can see that here as well. What we did was we looked at the percent change in performance for this class of stocks as well as the financials from that origination date of March 3rd. And so you could see, of course, the regional banks just getting hammered and really sitting pretty much at their lows, down about close to about 30%. Okay, and of course, this all started in the very beginning of March with the crisis and the liquidity crisis that happened at Silicon Valley Bank, and then that was followed very shortly by Signature Bank here in New York, and then a couple of other ones. And so that led to some rescues by some other companies. Credit Suisse, of course, also got into some trouble. And so all of that started at the beginning of March. Okay, and so that slammed down the regional banks and the KREs here, and then of course a number of companies within the broader financial sector. However, you can see that the financial sector itself, it's down about 7%, while the regional banks, of course, are down just about 30%. So, but that's that was the driver for that. So if we now go back to the weekly chart here, so we can see that though the financials did have did essentially show some relative strength over the last week, along with energy. Okay, on the really weak side, utilities were down, as well as real estate. Okay, so those are the weak ones. Okay, now if we move on to and look at a slightly higher time frame, when we move into the rolling month, okay, then we get over here. Okay, and we can see right here that the financials, of course, are pretty much sitting at the bottom here. And of course, it's really now at this point for the last rolling month, which is the last five weeks, which is essentially, depending on holidays, anywhere from 23 to 25 trading days. The financials are more or less now sitting pretty close to break even for the last 5 weeks. Okay, if you recall, though, we said that on March 3rd is really when the slam down from the regional banking crisis occurred, and that's more like about 7 weeks. So consequently, that's why this is actually showing it doesn't really look that bad. It's only down, it's pretty much break even, because that 7% smackdown that occurred on March 3rd, okay, which is really a full week before this occurred. And so a lot of that action just happened to have occurred right here. And you can see leading into where this percent change begins on the 10th, okay, that was that prior week here. And so that's where this slam down occurred here, okay, but it's really not taken into account here, okay, but that's why this doesn't really look that bad, because the 7% that occurred was really in this week that preceded that, okay. So in terms of relative strength, communications were certainly the strong ones over the course of the last month, up about 13%, and then there's tech, and then there's healthcare. Okay, and again on the downside, the financials, of course, were weak. Retail has generally been weak because of inflation and lack of consumer confidence, and that's borne out by a lot of a lot of macro stuff in terms of consumer confidence surveys, all that kind of thing. Okay, and then kind of sitting here in the middle are the utilities, consumer staples, energy. If the economy actually starts to go south, though, one of the things that we'll be looking at here will be health, utilities, and consumer staples, because those three sectors tend to do better in a contracting economy. And so if the Fed doesn't get it right and they drive us into a recession, these will be the sectors that we'll actually be looking at again: health, utilities, and consumer staples. All right. So that's kind of the broad view of the sectors, looking at everything from the perspective of both of the last trading week and then the last rolling month. Okay. In terms of looking at specific levels here, here's a chart of the SPY. Okay. And so this is a daily chart here. This is where we are right now. Okay. And if we look to the left here, right now we're sitting what we refer to as an area of supply here. What this area of supply is essentially an area where price came up, consolidated, and then kind of dropped out of this with a great deal of energy. Okay, and what represented here was an exhaustion of buyers here. The buyers essentially ran down the price chart, and so it backed up. And so the only reason that these trades then occurred after this exhaustion of buyers was that essentially sellers ran down the price chart until they found willing buyers. Okay, so the expectation was potentially when price came up here, we would then start to see some more selling, but certainly price would get stopped by this. And you can see price has come back up here. It's now kind of gotten stuck in this level, and it's kind of fighting to see if it'll either go through this level or whether it might drop out again. At the time we were looking at this, we really weren't impressed by this level because of the prior trading that occurred over here. Underneath here, though, if you notice right here, there's a place where price came up, then it backed up here, and then rocketed out of there. If we actually look at this in a 2-hour chart, this is actually a very nice level in here that we found. And so this is what we refer to as an area of demand, because essentially supply and demand were in balance within this area, and then obviously this huge gap occurred, and then 3 very bullish moves here with this green candle, that very bullish candle, even though it's red, that's still a very bullish candle, and then of course then that major outsized green candle. Okay, so this rocketed out of here with a lot of energy. So if we get a pullback to this region, we would expect there would be some upward price pressure that's waiting to be tapped in here. Okay, and so essentially that's what we think of this as a demand zone. Okay, so up here, this was a kind of a sloppy supply zone, and we kind of mark that up here with this explanation here. Okay, that there was an area of expected downward price pressure. Okay, that out of this region here. Okay, again, we weren't really impressed with that one. On the other hand, this one over here, we actually are impressed with. And so if price breaks through here, we would actually expect to see this would really represent a point of major resistance here. And in fact, where we would actually expect to see price actually get pushed back down from here. So this is an area of supply. Okay, supply and demand were in balance here, but then they went out of balance as there was an exhaustion of buyers. Okay, and again, so that's when once price drops out of here, that only leaves a supply of shares, where a supply of shares willing to be sold at this level, but no demand for them. Okay, that's why we call that a supply zone. Similarly over here, and again, we looked at this more like in a 2-hour chart, there is only demand in here. Okay, if we look at the distance of where those levels are in relation to where current price is, we can see this is about 3% higher than where we are today, for about 3.25%. On the other hand, down here, this is approximately 4% down. Okay, so those are the distances where we are in relation from current price to kind of where the next clean levels that we actually think are reasonable trading zones on the S&P. Okay, so that's where these levels are. Okay, and similarly right down here, this was a level where if we actually looked at this in a weekly chart, in fact, we could actually probably just do that right here. If we look at that level, and you can see right here, this is an area that already, was already shown, but it's a good illustration of what I'm talking about here. So this is around the area of about 383 down to about 375. But if we look at this in a weekly chart, which is actually, this is kind of sloppy here, and there's a whole lot going on here. But if we bring this up to a weekly chart here, and we take a look at that right here, that's what that level looks like here. We can clearly see price dropped in here. We then had these 2 very kind of indecisive doji candles here. Price more or less goes sideways. And in fact, if we blow this up here, we can see that price more or less closed at pretty much the same level for really 2 consecutive weeks, right? Because it closed right here. The next week it closed pretty much the same, and then really just very, infinitesimally down from there. Okay, and then right there, that's when price then starts to kind of rocket out of there. Okay, so this is an area of consolidation. Again, from what I just said a minute ago, this is an area of weekly demand. And so when price came back into weekly demand, we can of course then see how price rocketed out of that. Weekly demand zones and supply zones tend to be very strong because those essentially we can think of as institutional levels. Institutions, Goldman Sachs, whether it's ETFs or Goldman Sachs or any sort of hedge fund or endowment fund that's buying massive quantities of stock for their members, they're not looking at 1-hour charts and 30-minute charts. They're looking at weekly charts, sometimes monthly charts, and certainly generally no lower than daily charts. So weekly charts are essentially major institutional levels. So when we see a major clean demand zone that's in a weekly chart, that's generally a solid trading level. And we can see right there, this was the basis of actually some good trades that we had based on using the SPY and SPY options. Okay, so that was the deal with the S&P. So if we now head over and we take a look at the Qs and do kind of the same analysis here, this is what the daily chart of the Qs look like. Blow that up a little here. And so we can see it more or less, the chart more or less is kind of moving, kind of looks alike. Okay, so right here, here's a 2-hour level. Okay, it's gotten stuck in it. This really resolved cleaner in the daily chart in the S&P. On the other hand, this level, if we look at this in the 2-hour, this kind of looked a little better, but it's the same thing here again. It got stopped by this level, but it really has not done anything since. It has not sent it back down. Okay, so our expectation, it'll either get sent down or it'll break, and then really what up here, this is kind of a clean level up here, and so essentially we'll be looking for then this area, and this is very similar to that SPY area where price kind of came up here, and where we're expecting price to kind of get smacked down from here. Okay, this is about 4% higher. I think on the S&P it was about 3 or 3.25. On the downside, though, this is the next clean area of demand on the Qs, and again, this kind of lays out better in the 2-hour chart. If you recall, though, on the SPY, this was approximately, I think, a little less than 4% down. This is about 6.5 or 7% down. So this actually has a further way to fall here. So if we get a major market pullback, we expect the Qs to actually fall further than the S&P based on the proximity of these demand zones in relation to current price. Because again, the S&P demand zone was, I think, around 3 or 4% further down, while the demand zone on the Qs here is more like 6.5%. So essentially, there's more room for it to fall on the Qs than there is for it to fall in on the S&P, on the SPY. Okay, so that's kind of the deal here. The last thing I'll point out here is we also kind of tend to put up some of the major, a couple of major, sort of tracking indicators that sort of the rest of the world likes to look at, and that just kind of gives our levels some context as well. So this is the 200-day simple moving average in black. This is the 50-day simple moving average, and that's the one in blue here. And then right here in this kind of green-blue here, the cyan color, this is the daily lower Bollinger Band. That's the standard standard deviation Bollinger Band on the lower Bollinger Band. And then this is the standard upper Bollinger Band, again, on the daily chart. So again, that gives some context to where our levels are, okay? So for this demand zone, when this thing pulls back, if it actually goes into this level, most likely it will have dropped below the daily Bollinger Band, okay? Right here, if we end up here, depending on, how price reacts, it'll be in the vicinity of the upper Bollinger Band. So again, that gives us some context. But again, the thing that we really care about at PTL is we care about the presence of these supply zones here and demand zones there. Okay, so that's the deal with the Qs. And the last thing we'll take a look at are a couple of symbols that a number of our subscribers asked us about this week, and these are symbols that obviously lots of people look at, and that's Apple and Tesla. Okay, so if we look at Apple here, here's the daily chart of Apple here, and again, kind of the same sort of analysis here, where we kind of plotted where are there clean demand, supply, and demand zones here. So right here you can see Apple is kind of sitting right here at this kind of this pivot on the 2-hour chart, and I think within this, if we broke this down into a 30-minute or a 60-minute chart, this would represent an area of supply here. Once we start to drop below 2 hours, I'm not, in terms of swing trading, I would much prefer to be sticking to sort of these higher time frames. But there's a clear pivot here, and this would kind of lay out in the 2-hour chart. All right. So, This is an area, again, it's kind of up, it just got here a couple of days, basically, was it 2 days ago? On Thursday, it reached here, more or less kind of hung out here on Friday. So we'll see we'll see how the trading week transpires, whether Apple gets smacked down from here or whether it, kind of goes sideways or within here. But then above here, there's a 2-hour demand supply zone, excuse me. That's about 4% higher here, okay? And then on the downside, if it pulls back to demand, okay, there's a demand zone approximately 5.5% below over here, and then there's another demand zone about 2.5% below that one at around 8% lower than where current price is. So these are the key areas on Apple that we're kind of monitoring. And of course, within that, that's subject to some revision, but we'll see what happens as the week starts out. There's also an area that's sitting right in here. We might actually look at as well. But we just wanted to kind of highlight these major levels here. Okay, so that's the story with Apple. And then the last thing we'll take a look at is Tesla. And this is actually a good example of where, and again, a lot of our subscribers for some reason asked us about this week, so this is why we're kind of looking at it here. But this is one of those things we kind of told our subscribers that not every chart necessarily has a great or an actionable setup. And so to some degree we were looking at this, and there's really nothing that really impresses us, at least in the near term, because all the levels that we're looking at are actually pretty far away. Okay, so we're sitting right now, this thing closed actually at 185 even the other day. Well, the nearest clean demand supply zone, is like 23% up. Okay, so right here, and then there's another supply zone here, and we're kind of debating between these two. And then this one's actually 30% up. So that's a long way up. Okay, that's a major rally. So that's looking for a bearish trade. We really wouldn't be looking at anything until at least it cleared this mess here. This is an area which we can think of as a resistance zone here. But there's a lot of sloppy trading that's gone on in here, and it's quite possible the price could just kind of blast through here. Then on the downside, in terms of looking for a bounce, there's a 2-hour demand zone right here, but this is about 13% lower than where we are here, going from 185 to 160. So in the short term, we don't really see anything actionable for Tesla, until at least if we get a pullback, we'll start to look at this level. But again, that's kind of a long way down, obviously. That's about 13% down. So at any rate, there's your market rundown. So again, we covered the S&P and the Qs. We looked at some sectors, and then we also took a look at a couple of symbols. So anyway, thank you very much for joining us here. We hope you liked what we shared. If you're interested in learning a little bit more about how we at PTL look at the markets and learning more about our trading methodology, you can click on the schedule a call link here, and you could set up a call with either myself or our co-founder Ryan Nocera. Okay. So anyway, thanks again for the privilege of your time, and we look forward to speaking with you. And again, thanks for joining us. Take care. Bye-bye.